Okay, let's dive into it. Stock market technical analysis. We'll use the charts to be our guide, go through the broad markets, look at individual trade ideas, and then we'll wrap up. So, triple Qs, guys. We have, there's a new low today. On the daily chart, I don't see any real change. I mean, the daily chart still projects that we're going to head down to the 200-day moving average and this key level of support about 478. I don't see any change there. On the hourly level, we do have this bullish divergence essentially on the hourly level. You can see here, there's the hourly RSI and the PPO, both showing bullish divergence. We made a low, a lower low, and today just another lower low, but it's a divergent low on the hourly chart. So that tells me there's a possibility of a rally. I did post that in the private member group this morning. Basically this chart looks like we could see a rally, which would make sense for the market to rally into the weekend. The market, essentially on the daily chart, the trend looks like we're heading lower, but if you want to keep bulls in the trade over the weekend, ideally you want to rally the market into the close. So that's kind of the way I'm leaning right now, is the fact that we rally on triple Qs into the close, maybe up to this 517-ish level. There's also a potential downtrend line up here, so we could rally there. I don't think we'll get that high today, obviously, but I could see, maybe next week, early next week, probably we could rally up there. So my targets for rally would be here or here on the hourly time frame. So that's kind of shorter time frame. But longer term, over the next weeks, months, I do think we're heading down, really probably weeks, heading down to the 200 days. So short time frame, probably a rally, back to the daily chart. Longer time frame after that rally, down to the 200. That's the way I'm seeing it going. A big reason why I think we could rally is Apple. I see it falling to decent support this morning. You can see on Apple on the daily chart, you've got, this is former resistance here, and then you did break out, and we're basically testing that former resistance from above, which is support now. So you've got support there. It's about 237, and then you also have this uptrend line here that we're below it now, so we'll see where we close the day, but that uptrend line is also acting as support. So I've got kind of dual support, and in order for that support to officially break, I need to see a daily close, where we're basically probably down at the lows. If we trade down at the lows and close down at the lows in Apple, then that would be a daily break of that support, and that would be a sell signal. That would tell me, okay, this breakout was a false breakout, and we're now going to head, probably quite a bit lower. I would say right down to the 200-day would be a good target for the first move down. So that's the downside, and it really kind of determines how the daily close goes, because if they can rally this up and close this at or just slightly above that support, then I could see, again, we held that trend line support, and we could see a rally there. Where, and who knows where the rally goes. We could obviously go and make new highs. That's possible. So that's that. Now, if we get a daily close well below that support, then that support's broken, and that tells me we're going lower. So today's kind of, going to be telling by the end of the day. Meta is still holding trendline support. This one has not broken down. You can see, we're just kind of still holding. Meta's actually up today. So usually when you're going to have strong impulsive selling in the triple Qs, pretty much all of the Mag 7s will have broken support. We don't have that yet. We still have some holding support, which tells me there could be some more chop. We could see that rally and some more chop in the triple Qs. And Microsoft, again, it's too close to call right now. I mean, on Microsoft daily chart, you've got these this trend line to watch, lots of reactions there, and look, it's just kind of chopping around. They're chopping around this trend line. It hasn't really given us a clean break of that trend yet, and so we'd want to see that on the daily close to help us determine if that trend line has broken and there's a sell signal on Microsoft. So yet to be determined Also, there's this downtrend line here, and you can see we're basically backtesting that. So we're still in the range of support on Microsoft, and same with Apple. And again, just those two alone, if those aren't going to break down, if we don't have definitive sell signals on those two, the market's going to rally most likely. Okay, not natural gas. We'll get into natural gas in a second, but this is interest rates, 10-year Treasury, the TNX. Again, this is the key thing I've been watching. We are spiking today into kind of a double top. All right, there's your former reaction high. I suspect they're going to close TNX, the rates right there at about 473. And then I think we could see probably a pullback in rates next week. So here's what I see. This is what it looks like to me. If we rates hold here and then they fall back down to that support level. All right, and then they'll rally from there. But that's support. And if you see that, you can see that basically if we start to come down in the PPO and the RSI, we're gonna have confirmed negative divergence in rates, which would give us that pullback. So that's what I see. And again, if rates do fall, next week essentially, then that's kind of another reason why the market could rally, because the market hates rising rates and it loves falling rates, and it's as simple as that. I mean, at the end of the day, this market trades on two things: one, falling rates, and interest rates, and AI hype. That's basically what this market's trading on. So watch those interest rates. Right now, we are spiking to a double top. So I think there's going to be a pullback in rates. And let's look at the TLT. Let me go down to the hourly chart. We do have some bullish divergence there on the 60-minute chart for TLT, which tells me that, we could see bonds get bought up. And what I'd be looking for is, you've got this downtrend line. It's kind of right there, right about in there. Look for a breakout of TLT. And then, if you see that breakout, that means rates are falling, and the market will take note and likely continued rally from there. No guarantees that happens though. If TLT continues lower, you burn through this divergence on the 60-minute chart and rates spike, and the market will likely panic and freak out, and you should see like a pretty swift move down to the 200-day moving average on triple Qs. So that is completely possible. We just have to continue to let the charts be our guide. Okay, trade ideas, just individual trade ideas. I got a couple of them. Coop, again, as rates have spiked, that is not bullish for mortgages, all right? You're going to have less and less people being able to afford a mortgage as rates spike. And this company, Coop, is basically in the mortgage business. So it's not even really that far off the highs. You can see here, it's only about 11% off the highs. We're breaking support levels. Again, pretty definitive break. We've pretty much broken those support levels now. So I see us heading straight down to the 200-day moving average, down there at 90, or it's about 88 roughly. And you probably get a bounce there. We haven't hit the 200 for quite a while. So very, very likely you get a bounce, at least a reactive bounce at the 200. So I think it goes like that, boom. And then you probably bounce, grind around for a couple weeks. So I like that one for a little more downside. Some of these banking stocks are starting to break down. So FITB, we were holding that support shelf right there at 42.30 for a couple weeks, and today gap down and it's broken. So I don't think they were going to cover that. With where this is at, I believe that's probably a sell signal. Should head down to the 200, likely get a reactive bounce at the 200. No guarantees you do, but it's just probable you get a reactive bounce, and then we should head lower. This one is trading off of this major pattern here, this big bullish or bearish rising wedge. And this one, the major target is the widest part of the wedge. You take it at the point of the breakdown, which happened, weeks ago, or months ago, basically back in December, I guess, early December. And that's your projected target, which is down here at 34. And again, looks like we're just heading down there. We're working our way down to that projected target. So we just basically, your original sell signal, which was pointed out in the private member group. All right. So if you're interested in getting kind of alerts and charts like that when I see sell signals on trend trades and things like that, feel free to join up. Link in the description below. It's $5 a month. You can cancel whenever you want. And again, this just looks like it's heading lower. So I think we're going another, we've got it to drop. We've got another 16% downside on that trade. And then this one, PNC, very similar. Looks like it's breaking today. This looks like a new sell signal. So you've got support. And this is also a bank. And then you've got this support shelf here. And then you can see it's broken. All right, that trend line support has broken today. So that's a sell signal. And there's a little gap to, they got this gap. So they're probably going to try to hold it here. And it could rally and kind of chop around a little bit here, but I do think it's going to break. And then when it breaks, it should flush right to the 200. All right, so that's the setup there. And again, this one, if FITB is going to go down 16%, I think this one's very likely going to probably, I think it can drop all the way down here about 20, down to these levels, these lower levels, 145, 143. Again, that's the major target for this pattern. Take the widest part of this little wedge at the point of the breakdown, and it says about 153. So anywhere down around there would be the major target. And that's a fresh sell signal today, unless they can rally this thing into the close and close it back on trend line. Natural gas, again, this one was pointed out in the private member group. This one, you've got a downtrend line, all right? Nice clean downtrend line, and it broke out, but really the breakout was here back on the 30th of December, and this thing was up like 25%. It basically just gapped up 25%. So we didn't want to chase that. You don't want to chase, but over the next couple days, they sold it right back down to support and gave us a very clean opportunity for a long. I did send that chart out in the private member group as a good trade setup and trade idea. The way I played it is I took the long here. It did rally the very next day. All right, there was a reactive bounce, rallied up about 10%. I took half of my position off at that point, and then I've kept the other half because I figured they'd probably sell it down, make it look like it was going to continue to break down, but then rally it up. And sure enough, right back up to the kind of those levels. We could pull back here, maybe fill that gap. That's possible. Maybe pull back and fill the gap. I don't think so, though. I think natural gas is actually going to just rip straight up to this 20. It's about 2150 is the former reaction high right there. I think we're going to just go straight up. Natural gas tends, when it starts running, it tends to just kind of shoot straight up, and it also crashes straight down. So that's the way I'm leaning. Again, I'm already, if you took the trade, if you were long at that that objective area right there, then we got a runner, and you can always just take some profit to lock in your gains and let the rest kind of run. So that's my goal right now, is to let this continue to run up to that 2150 area. MPWR sitting right at support. So again, this one can rally. I mean, I can see a rally here. It's really hard to say. I mean, it's been grinding along this trend line. It hasn't really been able to take off, and that's a little bit different behavior than in the past, because this trend line has been in place. I don't even know how far back this trend line goes, but let's just say it goes back quite a ways, many years, and you've got support right there, and we're just kind of holding it. So you can't short this thing because it's at support, and until that breaks, there's no short here. And the only trade to make is a long trade. So it is an objective long at current levels. And yeah, I think if it can get going, you probably could run up and test that 200-day again, up about 764. I think that would be the area I would exit that long if you were going to take the long here. But yeah, that's kind of what I've got, because the 200 is broken. It's a big gap down. It's a breakdown. So I think a very objective trade right now is a long on this up to the 200, and then probably flip short again back down to the support line. You could cover your short there, or it's probably going to break at that point. But so this is a but a potential 28% rally up to the 200 days. So I like that one as a long. Here's my trading platform and the kind of the Apple chart, but you can see the 1 minute chart here. This is the key. This is that key level. It's about 237. That's that key level of support, or the area where really Apple needs to close at. You can see they're rallying it back to that level. So we'll see how we close. You'll probably get a little pullback here as people try to reject that level. But ultimately, it's maybe you get a little pullback and then it rallies back up to the level. So where do we close at? 237 is the line in the sand for me. If we can really get that close above, then I think we can rally next week, at least early next week. And then if we don't and we get rejected, we probably are going to go down, continue going lower. So I think they're probably going to keep us guessing and close this thing right around this level, but we'll see. I haven't talked about this one for a while. There's no actionable trade yet, but it continues to compress. ANF. It is an isometrical triangle. This is a coiling pattern, and it's getting ready for a break one way or the other. So you basically just take it at face value, essentially, which way it breaks, as long as there's no divergence really in place. If it breaks to the upside, it's bullish, and if it breaks to the downside, it's bearish. There's really no clues in the momentum either. The momentum is coiling as well, so we're just watching it. I'm going to go ahead and wrap it up here, get the video out. You guys drop me a thumbs up on your way out, and I will catch